Can you take me higher? This is my first live recording. I thought that would be funny. Bitcoin is knocking on its all-time high, obviously in USD terms, and obviously it's the nominal price. We know that if we took into account inflation, it'd be closer to like 78 or 80 or something like that. But plenty of countries around the world have seen their all-time highs. I think last time I checked, it was about like 14 or 15 out of the top 20 currencies in the world, including Australia. We crossed over 100K yesterday. And so I thought I'd jump on a YouTube live stream to sort of just share my thoughts about why I'm bullish. I've also seen that somehow crypto tokens are also pumping. I don't understand why. For those of you who know me, know that I'm Bitcoin only. Like, I'm not bullish on anything other than Bitcoin. Bitcoin is money. It's a digital commodity. Its value proposition is that it's scarce and it's programmatically such that you know exactly what the supply issuance is going to be. I don't have to predict what the developers are going to do in 4 years' time. Logic and rationality. Maybe I should hop up, yeah, show a chart. Maybe I should. I'm going to talk a little bit of like high level stuff. I'll pop a chart in. I don't even know how the hell to do a chart there, logic and rationality. Maybe I should. Hey, maybe that is something I should figure out. So I've been giving some thought as to like why you want to own Bitcoin. And the reality is that you don't actually need to have a massive allocation in order for it to have a massive impact on your portfolio. And so I'm not talking about like, you know, a guy who's got $5,000 and wants to ape in on something and hope it goes to like $200,000. Like, that's just another game altogether. I'm talking about people who have got capital, people that have worked over periods of time and are looking not only to preserve their wealth, but grow it into the future. And I think Bitcoin is probably like the asymmetric bet of this particular generation. I think we have the next 5 to 10 years, the best opportunity that we ever have is to create generational wealth. I don't know what lies beyond that, but I think right now we are still so very early. So I'm generally advocating that people take a 1 to 5% Bitcoin position in their portfolio. And this is a normal person, right? This is not a Bitcoiner. This is not somebody who's done 1,000 hours. Like, the more you know, the more Bitcoin you own. That's the game. But if you're just somebody who's sort of on the fence and you're trying to figure out where does this fit into my entire portfolio, I like real estate, I like stocks, I like all these other things, that's fine. I think Bitcoin can play an important role in portfolio, and I'm going to kind of share with you why. So, you know, I think what's hard about for a lot of people is it's hard for people to understand Bitcoin because there's so much misinformation. It's been explained in so many different types of way. You know, it's a peer-to-peer digital ledger. It's like triple entry accounting. But the bottom line is that it's a fixed supply currency with 21 million and predictable monetary policy, and it's the best money we've ever had. And if you don't understand money, you won't understand Bitcoin. It's just as simple as that. In order to understand money, you need to understand the history of money. So I recommend, looking into Vijay Boyabodi's bullish case for Bitcoin. It's an article. It's also a book. I interviewed him on my podcast. You should check that out. Or you can actually just dive into some work that Lynn Alden's done on the nature of money. It's absolutely critical. If you don't understand money, you're not going to want to understand Bitcoin. It just doesn't make sense. So Bitcoin is money. It solves the problem of monetary debasement. And that's why I think it's probably one of the most important things. So like, why am I so bullish on Bitcoin? Well, let's start at the beginning. Bitcoin is digital gold as far as I'm concerned. If you look at sort of, through the lens of money, and why gold became the best money over the course of like 6,000 years. It was really because it ultimately came down to its scarcity. It was one of the best ways for us to be able to preserve wealth over long periods of time. But Bitcoin is better at being gold than gold. It's easy to store and transport and divide and to verify for authenticity. It's also perfectly price inelastic. It doesn't matter what the price of Bitcoin does. It's always going to be the same. At 21 million, we can't change that supply. We can't change the rate of issuance. So that makes it better at being gold than gold. And The reason why we eventually decoupled from something like a gold standard is, as Lynn Alden has described, our commerce became faster than our money. We were trading over the telegraph and we needed a money to be able to match that speed. And eventually it was like, hold on, we can't get ships across there fast enough. Let's just use paper. We're going to just abstract gold away and we're going to make paper. And so that's sort of like kind of what happened. And so, you know, from that perspective, when I look at Bitcoin, I say Bitcoin is better being gold than gold, because I can't take $1 billion of gold, you know, and hop across the border. If, for example, my country was had turned against me, for example, I can do that with 12 words in my head. You know, I don't know if you know what the costs are to store big gold, but it's about 2% per annum. If you've got any amount in of real money, I'm not talking like Mickey Mouse money, I'm talking real money, it's 2%. And so gold also has these sort of costs that just erode your margins and your growth long term, whereas Bitcoin you can hold for free. And so what's really fascinating is, if you look at Bitcoin's monetary policy, we know that the last one will be mined in 2140, right? But by 2036, over 99% of the entire supply that will ever exist would have been mined. I mean, right now, I think there's something like 93.5% of all Bitcoin that have been mined. So those have been distributed. So we can worry about, the ETFs are going to scoop up lots of Bitcoin and blah, blah, blah. Well, hey, do you know what? We've had 15 years for this asset to be filtered through amongst retail investors, people like you and I, and yeah, I mean, I don't see that as being a major risk long term. But think about it. We're now in 2024. In 12 years' time, 99% of all Bitcoin that will ever be created would have already been created. And the 1% from 2036 till 2140, that's going to take about 100 years for the last 1%. So that just shows you how scarce it is. And it highlights the point that how important it is, in my view, to kind of start stacking Bitcoin, because eventually you're going to find it's increasingly scarce and difficult to obtain. Because think about it, in 2036, you want to get yourself some Bitcoin, you've got to pry it out of the hands of the 99%. Today, you can still pick up some fresh corn that's come, from the miners, so to speak, whereas in the future, it's not going to happen. So that's just something to bear in mind. And that's why, I say over and over again, Bitcoin is better at being gold than gold. The only advantage that gold has is a 6,000-year track record. That's pretty much it. But as we've shifted from an industrial age and an analog world to a digital world, it's going to become more and more obvious that you're going to want to store your wealth in digital gold. Okay. And so that's kind of what, that's the way I look at it. I mean, I can't send $1 billion worth of gold in a bearer form, in other words, person to person, within 10 minutes for almost zero cost. But you can literally send billions of dollars of Bitcoin for depending when the fees are, but it could be anywhere from a couple dollars to maybe even 50. You're like, I'll do it. So, that's something to think about. Another thing to think about is with these ETFs. So far, I think the gold ETFs are about 200 billion assets under management. Bitcoin's sitting at about 50, and that's since early Jan. So think about that. It's about a quarter of the way there. And gold ETFs have been around since 2004, and now we've had Bitcoin ETFs for a month and a half. Okay, so if you think that Bitcoin is better at being gold than gold, and it's digital gold, and that we're in this new digital world, not an analog world, and gold's no longer serving the purpose, and gold, and all these type of reasons, if Bitcoin swallows gold's market cap as a store of value, not as an industrial metal, which gets used 10% of the time, it's a $500,000 Bitcoin. So yes, I'm bullish. The other thing you got to think about is Bitcoin protects you against fiat currency debasement. It doesn't protect you against CPI. That's a short-term government sort of manipulated statistic about this is what it costs you. It's not real. It's not based in reality. And there's really nothing that offers you a true inflation hedge other than what they call tips. But generally speaking, what Bitcoin does protect you against is long-term monetary debasement. So when you've increased the monetary supply by like 40% in 18 months, all of the asset prices go up, okay, including Bitcoin. And so what tends to happen, and you see this sometimes, is you have what's known as a melt up, where it's like, oh, I can't tell whether or not the denominator, the dollar, the bolivar, is falling or the stock market is climbing. Because you see in Weimar Germany, when it was during the hyperinflationary period, as well as in Venezuela, we see the stock market going through the bloody roof. And so you ask yourself a question: is my fiat becoming less valuable, or is the stock market really that good? And so we're seeing today this S&P 500 at all-time highs, and you've got to ask yourself: is it because the dollar's weaker and people are just trying to store their value there, or is it because the economy is so good? I'd say no. Have a look at also some high-level data, and I won't go into too much detail here, but think about, okay, there's a crowd called the Congressional Budget Office. They sort of project kind of what the government's going to be spending and whatnot in the States. They spend at the moment over $1 trillion per year on interest payments. That's more than defense. And the US is sort of the biggest consumer of oil. The US military is the biggest consumer of oil. So it just gives you a sense of the scale of the interest payments. And, debt to GDP is at like just under 120. And the current debt of the government's about 34 trillion. Now, Lynn Alden has done some analysis which says that basically of 50 companies. Now, it's actually not Lynn Alden who did this. This was a crowd that Lynn Alden has basically cited. But out of 50 countries that had debt to GDP in excess of 130%, all of them defaulted, bar one, and that was Japan, because they're a big creditor nation. So basically what that means is they either default, they literally don't pay back the money they owe creditors, so like, in government bonds and whatnot, or they will pay them back, but with significantly depreciated currency. They can just print more money and pay their creditors back. So it almost always happens. It's also worth remembering that, like, when we look at global reserve currencies, we're seeing what many people think is the US dollar in decline. It's been around for, it's really like hard to say when did it become the global reserve currency. You could argue it was Bretton Woods, 1944. That's really when the US dollar took over. And the other thing to note is, like, it's never like, okay, now this is the global reserve currency, next day it's that. I mean, it switches over time. Countries kind of start going, I want less pounds, I want more dollars, and we've seen those transitions. There's some really good stuff by the Visual Capitalist that shows that. But basically, we've been in a sort of US-led monetary financial order, however you want to describe it, since 1944. So here we are. We're broaching kind of the end of the potential kind of reserve currency status. We've seen the Portuguese and the Spaniards and the Dutch and the British, and now we've got the US. How long is that going to last? I don't know, but it can't last forever by definition. And you look at how much they're spending versus how much revenue the country brings in. It's arguable that in the next, 5, 10, 15, 20, 30 years, it's going to be very different. What's the role that Bitcoin could play in that? Potentially significant. It's neutral. It's apolitical money. It's money for enemies. It's money for the US. It's money for North Korea. Nobody can interfere with it. Nobody can confiscate it. And so that's potentially quite a big deal. We also now live in this multipolar world. And this is another reason I'm so bullish on Bitcoin. We live in this world where, in 2022, Russia's like 300 billion odd in reserve assets were confiscated or seized, more like it, or frozen. Actually, that's not seized, they're frozen. And then we also saw in 2022, the Canadian government said to the truckers, like, listen, I don't like what you're doing. And then they stopped any donations through the payment processes. So you can kind of weaponize the financial system is essentially the point that I'm trying to make. And some people were like, well, I don't like that, So it doesn't matter what you think of those. Who cares, whether you think Russia shouldn't or shouldn't have done what they did, or, truckers were right or wrong. It's irrelevant. But the idea is that there's a third party that can actually confiscate your money and stop you from trading and doing whatever you want. So, Alex Gladstein has done some great work here. He says, like, more than 4 billion people live in one of two things, either in a sort of tyrannical regime or like in a hyperinflationary environment. So if it's a tyrannical regime, they typically want the capital stuck in the country. Like, I'm from South Africa, and so they don't like a lot of money flowing out, so they make it hard. Bitcoin is capital with wings; it can just fly off. If it's a hyperinflationary environment, these people don't have access to even things like US dollars. So, if you're living in Africa and you're in Malawi living in a village and you've got your Malawian kwacha, which is an utter disaster of a currency, that just has been sort of hyperinflating, you can either lose 80% of your value, or if you've got a smartphone, you just get a Bitcoin wallet and you can do peer-to-peer trading and you can preserve your wealth there. Now, obviously this requires savings. It's a whole nother story, but I think that the censorship-resistant money and the censorship-resistant asset aspect is understated. I think it's going to be a very important factor in the next 10 years or so, as we're going through these geopolitical struggles. And I wouldn't be surprised if we see some nation states now ditching US treasuries and gold and other things and saying, let's put some Bitcoin on the balance sheet. It's like essentially like gold and steroids, except that it doesn't require a central entity to look after it. It's actually just, we can keep it ourselves. So that's just something that I would be thinking about. All right, how are we tracking, eh? All right, geez, we've got quite a lot of, quite far down the rabbit hole. Okay. The other reason why I'm very bullish on Bitcoin is that you can look at Bitcoin as digital property. This is not a unique take. This is a kind of Michael Saylor type thing. And, when I think of generational wealth, you got to think about things that are going to be valuable 100 years from now, that are going to stand the test of time. Like, how many people need like Apple iPhones every single year for the next 100 years? Like, Apple's going to have to do something seriously different to be able to remain relevant in 100 years. And if you think about, okay, well, what's happened over the last sort of 30 years alone, you think about like how, I remember having to phone people's homes to ask if I could speak to their daughter, as an example. Well, hey man, I'll meet you at this place at this time. And like, I didn't have a way to communicate with them. I'm 39. So, I did live through an analog world. Now, we see that, as Saylor would say, you've got like the internet, which is dematerialized knowledge. Think of Google. You can like find out anything. And it's like our social interactions. Think of things like, Facebook or Twitter and all that stuff. Apple's dematerialized so many things. You think of like calculators and compasses and CDs and maps and all this kind of stuff. And so Bitcoin dematerializes gold and real estate. And so it's something to think about, that like, okay, so today everything is about, can I see it? Can I touch it? Does it have a cash flow? Well, maybe in the future, things that will be valuable are actually digital, and it could be like something like Bitcoin, which is digital property. So, if we look into the future, okay, we go like, all right, are we going to want to use something like Swift, the Swift financial system? It was created like in the 70s. It's antiquated, it's exclusionary. In other words, not everyone can get on it. It's slow. It takes forever to get things done. It's an absolute nightmare. Or do you want something global, liquid, free, permissionless, open, like Bitcoin? It's obvious where this is going. It's just the question of time. Okay. And so as we become more interconnected, I just think that we're going to use Bitcoin as a sort of rails for global payments more and more and more. And think of things like AI. AI is going to be, doing a whole lot of stuff for us. Imagine these AI agents. So they're going to want to try and figure out, okay, I need to open up a Cash App account, and then I've got to do this, and then I've got this guy in in Argentina, and he wants the peso, and then I've got, okay, now I'm trying to deliver some value from them. And what I do is I'm actually subcontracting some work to someone in Colombia, so I need to get their currency, and then I'm going to pay US dollars, or they're going to just use Bitcoin for it all. It's pretty obvious. AI will converge on Bitcoin. So the way I also look at it, so if you look at it like holistically and you go, what's digital property? I look at like digital property as being potentially like scarce blocks of real estate in Manhattan in like the 1890s or something. Like you could go and buy like a whole block for what would have been a relatively small amount of money at the time. Now, today, those people, what do they do with that money? Well, they actually just sit on those properties and they refinance them, and they don't pay capital gains tax. So Bitcoin is like digital property in cyberspace. It's scarcer. It's going to be something that we can borrow against in the future. Those products aren't here yet, or they are, but they're not the best. They're a bit expensive, but I reckon in the next 5 years, they're going to be much, much more accessible and available. The banks are going to be like, hey, can we please custody your Bitcoin? And in exchange, you can borrow fiat. And people are going to like, yes, that'd be cool, because I don't want to sell my corn, okay? I wouldn't recommend giving the bank all your Bitcoin, and always, not your keys, not your corn, but you know the drill. But the idea is that Bitcoin is like sort of property. It's digital property, but it's more scarce because it's almost like there's 21 million blocks, and we've already developed like 93.5% of Manhattan, and so there's only like a small section left, and the rest of them you're going to have to buy from existing holders. The other thing about it is, like, unlike actual property, investment properties, there's no taxes, there's no maintenance, there's no tenants, there's no drama. It's like great property. So it's not just about again, this is not just like my view. This is the way tax authorities around the world think about Bitcoin. If you sell it, you incur a capital gains tax event. It's treated like a like property around the world, and I think that's how it should be. And property is about a $280 trillion market cap. So if Bitcoin's like 1.3 trillion today, how much do you think of real estate it's going to swallow? 5 trillion, 10 trillion, 20 trillion? Even 10% would have a huge impact on price. So yeah, for that reason, I reckon it's pristine collateral, it's global, it's liquid. I mean, one more point on this. Think about this. In the future, like right now, okay, I've got a home. Maybe I've got some equity in the home. Okay, I've got to go shop around and try and get I've got to try and get a bank to persuade me. Like, I've got to persuade a bank and say, hey man, can you please lend me some money? I want some fiat. What's going to happen in the future? And it's such a mission. Like, they've got to come here, do an assessment. What's the value? Okay, blah, blah, blah. Maybe you've got to shop around with some rates here locally. There could be like a valuer. Maybe they'll do a desktop one, but it's very like geographically constrained. Well, what happens if I'm like, hey, here's my Bitcoin. It's worth, $2 million. And I go, all right, to all the banks in Australia, hey, I want to borrow $300,000, and I'll post a Bitcoin. Okay, what's your rate? Thank you very much. Singapore, what do you think? Okay, Dubai, what do you think? Because it's global, it's liquid, and you can literally just take it away from me in an instant. And it's not like you have to go through the court system. It's like a bank's dream. So it's gonna get there, and I don't know when, but it's gonna get there. I think it'll be sooner than I think. So sooner than I hope it's sooner than I expect it to be, which will be the next 5 years, but we'll see. Okay, well, we are cooking, and I've got a few more things to touch on. Okay, I'm going to try and whack through this ETF stuff, because this is really, I think, where a lot of people are most bullish. So, all right, kind of on the ETF stuff, there was a lot of noise in 2021. Hey, the institutions are coming. Well, they didn't come. And the reason why is because nobody cares about trying to figure out public-private key encryption and how do I self-custody, and nobody wanted like a proxy for Bitcoin like Grayscale or MicroStrategy, okay? It's a pain in the ass. What they've now got is ETFs, okay? And they've got a whole bunch to choose from, including, the most recognized names in the game. And what's even more interesting is the one massive asset manager, number 2 in the world, Vanguard, has kind of gone, no, we're not participating. And then within a few weeks, its CEO stands down, and he's been with the company 33 years, CEO for 6. And you just wonder, that's an interesting timing. Not saying anything, but I'm almost certain Vanguard would capitulate and offer its clients access to the Bitcoin ETFs, and they'll be kicking themselves they don't have their own product. So the ETFs as I said earlier, are likely to flip gold in the sense of the assets under management. And that could probably happen within the next year. If we just look at it like we're a quarter of the way through. The current demand for Bitcoin is around 10 times the newly minted Bitcoins, which is like 900 a day. That gets cut in half in April. So we're going to now have like 9 to 11 or 12,000 Bitcoins a day in demand relative to 450 that are being created. You can do the maths, okay? So I'm expecting explosive price action just for the next 12 to 18 months. ETFs is a new top of funnel. Okay, no longer shit coins, no longer silliness. This is now like a professional, institutionally recognized product. And it's like, hey, I don't care about keys. I don't care about self-sovereignty. I just want access. And it's like, yeah, cool. And pension funds will be there soon. We're also seeing some accounting changes so that from December later this year, people corporates can now actually mark to market the Bitcoin on their balance sheet at fair value instead of having to write off any particular losses in the given sort of financial year. So long and the short of it was, the way it was set up was really punitive, and companies like Square or MicroStrategy, they put it on their balance sheet. They actually, if Bitcoin went down 25%, but then went up like 100%, they'd have to mark it down at 25% in terms of their quarterly earnings, which was just silly. So that will change later in the year, and that's very bullish for corporates putting on their balance sheet. And then, as I said earlier, the banks are now asking to, please can we custody Bitcoin and digital assets. They only want your Bitcoin because they actually understand how this thing works. They're not really interested in Ethereum. And the proof I have would be the fact that we had a whole bunch of these banking institutions and associations get together not too long ago, and they were like saying to the SEC, hey, it's not fair that Coinbase and these other crowds are able to custody Bitcoin. We want to be able to custody Bitcoin too. So I think that's going to happen. The banks will all do it. You'll be able to enter into your, hop into your online portal and go, check savings, Bitcoin. That's just the way it is. You're going to be able to borrow against that Bitcoin. And it's, as I said, a pristine collateral asset. You're going to be able to do, you're going to be able to draw down a percentage of that and then just refinance in perpetuity. It's the perfect thing for the banks. I mean, they're literally just creating money out of thin air anyway. And they can actually get the hardest, scarcest assets sort of as collateral. So why not? We also know, like, compared to 2021, the sort of whole market structure is so different. It's like another reason why I'm so bullish. I mean, that was just crypto degenerate leverage and just a whole lot of tomfoolery. I'm just deliberately not using profanities for that. It's just horrific behavior. SBF, Binance trading against their customers. So much of the crypto garbage has been washed out. Serious people, I'm talking about like people with money, real money, not venture capitalists, not like leveraged like gamblers. I'm talking about like serious money, institutional money, big money. Like, they know that Bitcoin is what matters. And that's now what's come out, obviously, over the last sort of 3-4 years. It's like obvious, you'd have to be literally deliberately trying to ignore reality to kind of say, oh no, it's potentially Ripple too. It's like, yeah, Bitcoin is unstoppable, decentralized money. The rest of these have CEOs, they've got ICOs, they've had marketing departments and PR teams. I mean, it's just so obvious. You have to try and be willfully ignorant, like literally. So there's nothing that can be done to stop Bitcoin. Maybe in its early days, but no longer. You're going to have to go and switch off the internet and access to sort of the hundreds of thousands of nodes that run Bitcoin software. The way the government could actually destroy Bitcoin is by through fiscal austerity, like actually spending less than they bring in. But that's not going to happen. It's an election year. What's also awesome is we've seen Bitcoin be so resilient during periods where money was cheap, which is great. I mean, that's easy. It's easy to be, the fastest horse in the race when interest rates are like 0. But what about when it's 5%? Well, here we are. Bitcoin's cooking. So very positive that in some ways it's no longer just a pure tech risk play, because now there's other ways of being able to protect your capital, and still people are jumping into Bitcoin. Retail investors haven't arrived. It's another reason I'm so bullish. And I'm like, yeah, even if we are like over 100K in Aussie dollars and we're close to all-time highs, like the retail is just fast asleep. Many of them had a heart attack in the last cycle. They probably lost their money, gambling shitcoins. It always happens. They probably bought the top and sold the bottom in Bitcoin because they didn't do any work, because they don't have because they don't have conviction. And so if you don't understand it, you're gonna shit the bed. So it's not surprising. But retail's like interest is still sort of like, a quarter to about a half of what it was in the prior cycle. If you look at Google search volumes, if you look at sort of the volumes being done on platforms like Coinbase, although, those guys, whenever it's nearing the all-time high, just somehow drop the ball, deliberately or not, who knows. Another good data point is the hodl waves. So like 70% of Bitcoiners haven't sold in a year. That's an indication of strength. And what else? Bitcoin's the best performing asset in 6 of the last 8 years. You can't actually deny it. If you just look at it, it's like it's sort of 3 or 4 up and 1 down. And basically, the name of the game is, you've got to do your work, understand what money is, have a long-term time horizon. And nobody who's basically invested for 4 years or more has ever had a return less than 100%. Okay, never, ever. I've had someone on my show build a website literally to prove this very point. It's called assetattributes.com. You can go check it out. Honestly, it's mind-blowing. It's all about time in the market. All right. As we're approaching this halving, people talk about, okay, well, are they diminishing diminishing returns? Is it going to get worse? Well, I reckon potentially not. I think that we've had a lot of pent-up institutional demand that was scared off by FTX and all those crypto grifters. And also there wasn't an actual vehicle for them to invest. There's tens of trillions of dollars sitting on the sidelines that have been unable to invest because there's nothing institutionally recognized, no institutional grade product. I want access to Bitcoin. I don't want a proxy, and I'm certainly not going to hold some keys. And now they've got it. So I think that actually we could do better in the cycle than the last. I felt like the last cycle kind of was a bit disappointing, given the fact that everyone expects to go to 100K, and it turns out there was so much shenanigans in the back end and so much distraction with all the shitcoinery. I think we're still going to see a lot of shitcoins. I think we're going to see a lot of crypto. Grifters are going to grift. There's a lot of people who just want money for doing nothing other than just creating something out of thin air, printing a whole lot of it, and then dumping on people later. That's just going to happen. But I think it'll be less. And hopefully people are somewhat smarter. So if you want to make an allocation, there's a couple of things you do. Just get in. Stop trying to be cute. Don't try time the market like, oh, maybe there'll be a pullback. Like, the way it works in Bitcoin is that all the gains are in 10 days. Literally, if you look at Bitcoin's history, all the gains in 10 days. So don't get cute, just jump in. If you've got a 4-year time horizon, minimum, you should have a return of about like at least 100% if the past mirrors the future. And I think it could do better. It could do worse. I don't know, but I'm just saying, don't try and get cute. If you don't have a lump sum, dollar cost average, make sure to consolidate your UTXOs. If you don't know what that is, feel free to DM me. I'll tell you all about it. Don't get tempted to take chips off the table. Stick around for a couple cycles. 4 years minimum, 8 years is better. And make sure you buy real Bitcoin. Don't buy paper Bitcoin. Paper Bitcoin is basically like an ETF. You're never going to get that Bitcoin. You're going to get dollars, but you'll never get Bitcoin. And what you want is Bitcoin. Finally, think about this. You don't need a significant amount. There's a tool called Nakamoto Portfolio that Swan bought. Fantastic tool. It really allows you to kind of go, all right, I want to dip my toes in. What percentage of my portfolio can I put into this, and what will the impact be? And you can go and like stick your whole portfolio in there and see what the impact will be. Like literally 1, 2, 3, 4, 5%. I'm talking about people that have money. I'm not talking about people who have like $1,000. I mean, that's not going to move the needle. I would say, hey, go and do the work. Go and do like 100 hours, watch videos, listen to my podcast. And I do the work that I do is just literally a fraction of the knowledge base out there. There's people that are much smarter than me who've done so much work, and anything I know is just because of them, frankly. Lynn Aldens and the Michael Saylors of the world, Preston Pish, those kind of folks. Go and do the 100 hours, and then you can feel like, okay, maybe you can make a sizable allocation. But otherwise, that's about it. All right, friends, that's all for today. This has been quite fun. I might as well just pull up a quick Bitcoin chart because, and I hopefully know how to do this because, okay, it looks like we are knocking on. Are we knocking on the highs? So here we are. Yeah, so it looks as if we're close. I mean, I don't know. See, I don't know. I think we might have hit it, but just marginally. I don't think it matters all that much, friends. It's a rounding error in the big picture. This has been fun. Take care. Peace.